why you need to do tax projections before the end of the year. All right, did you know that one of the smartest things you can do for your finances is to run a tax projection before the end of the year? You know, most people wait until April to think about their taxes, but by then, oftentimes it's too late to take advantage of any tax strategies to save you in taxes. In today's video, I'm gonna break down what is a tax projection and why it is a game changer and how you can set yourself up for financial success before the end of the year. Tax projection is an estimated tax liability. So it's an estimate of how much taxes you'll owe based on your income for this year. It takes into consideration your income, your deductions, and your tax credits. So think of it as like a sneak peek at what your tax return will look like, but one that allows you to make changes before the clock strikes midnight on December 31st. There are three benefits to tax projections. First, avoid surprises. Next, maximize deductions. And the third allows us to plan strategically. Now, avoiding surprises. Let's face it, no one likes a surprise tax bill, right? So running a projection helps you to know exactly what to expect and so that you can prepare for it. The next thing the projection allows us to do is to maximize our tax deductions. For example, if we know we're gonna owe $30,000 in taxes, well, guess what? We can make some moves before the end of the year to strategically reduce our taxes for next April. Here's an example. Let's say that you made $100,000 worth of income, but instead of paying a lot of taxes on that, you can look ahead at what are my expected expenses for next January, right? So if for next January, I think I'm gonna be paying some marketing fees or I'm going to pay some repair costs for my rental properties. Well, if I can prepay some of those expenses before the end of the year, it allows me to maximize my deductions for this year, which then in turn reduces my taxes for next April. Now, one thing really important to keep in mind is that when we talk about maximizing deductions, I am never talking about spending money on something that you don't need, okay? That's just silly to do. But when we talk about maximizing deductions, there are two things we wanna look for. One is we wanna take a look at what are some of our known and expected expenses for early next year. Like I said earlier, if I was gonna pay marketing expense in January, if I just prepay it by even one day to December 31st of this year, that helps me to accelerate my expenses for a whole entire year. Something important to keep in mind is that you don't actually have to pay for the expenses with cash. Even if you charge it on your credit card, those could be potential deductions for this year as well. The other thing that happens at year end is this is a great opportunity for you to firm up your numbers. So for example, if you are one of the many investors who didn't really do a good job of tracking your car expenses or your overhead expenses for real estate, let's say your business travel or your real estate subscriptions and things like that, now is the time to spend some effort to gather up those expenses so you can make sure you have accurate tax projections. Now, another way to maximize expenses for this year is to fund retirement accounts. This is a super powerful tool because it allows us to pay towards our retirement rather than paying towards the IRS. You know, for example, if you are a real estate broker and you made $300,000 this year as a broker, well, guess what? You could potentially open a retirement account and contribute over $60,000 into it and get a significant tax saving. If you're someone who's married and your spouse is helping you out in your real estate business, maybe you consider paying her before the end of the year so she can also maximize retirement contributions. You can get close to $120,000 in tax write-offs through retirement contributions. So as you can see, doing year-end projections allows us to really take a look at different ways to maximize our tax deductions before the end of the year. And the third benefit of year-end projections is that it allows us to plan strategically. You know, we already talked about pre-planning strategically for deductions. Believe it or not, we can do the same with respect to our income. So let's say you are somebody who is doing fix and flips, right? You have a property that's going to be very profitable. It's about to close before the end of the year. Well, what you can do is strategically strategically delay the closing of that property so that your income will be shifted to next year instead. Similar concept, if I closed on this property on the sale before the end of this year, it is taxable to me by next April. Alternatively, if I delay the closing by even 1 day from December 31st this year into January 1st of next year, that allows me to strategically delay the associated taxes for a whole entire year as well. So when we talk about running projections and year-end planning, we're always asking ourselves some good questions. Would I rather pay towards my retirement account, or would I rather pay towards the IRS, right? Would I rather pay towards my business, or would I rather pay to the IRS? Would I rather pay money to invest in my rental properties and make them better, or would I rather pay the IRS? And that is why I always say tax planning isn't just for the super wealthy, it's for anyone who wants to keep more of their hard-earned money. So how to get started though with doing year-end tax planning, right? There are a couple steps to that. First step is to gather information, then we'll do a calculation, and step 3 is to actually take action. All right, let's start with gathering your information. This is the best time of the year, like I said, to make sure you firm up your numbers. How much is your income, maximizing your deduction, understanding what credits you have. If you have a bookkeeper, now is the best time to connect with them to update your numbers. And if you are your own bookkeeper, make sure to set some time aside so that you can update your numbers. The next thing you want to do is calculate your taxes. Now, I don't mean you have to calculate it. What you can do is meet with your tax person so they can give you an estimate of what your liability is. But most importantly, in year-end planning, we want to take action, right? First, you know how much taxes you owe, then you take action on funding retirement accounts, prepaying expenses, donating to charity. All of these things have to happen. Timing matters in these examples because with respect to year-end, where your numbers fall on December 31st determines how much or how little taxes you pay. So all these things that we talked about, gather information, calculate, take action, before December 31st. All right, if this sounds like something you'd benefit from, don't wait. Your CPA probably is taking Christmas off as well. So reach out to your team, get scheduled, get on their calendar to make sure you do some year-end planning. And if you found this video helpful, give it a thumbs up and share it with a friend. Subscribe for more practical tax tips, and let's make tax season a little less stressful and a little bit more fun.